Hello! Good afternoon, ladies and gentlemen. Thank you for being a part of this event. It is this time of the year when we are all curious what's going to happen to the PSA. But before that, of course, I'm so glad and thrilled to be here, standing in front of you. Sitting pala. There's no stage. Sitting in front of you and sharing our view of the market from here on July to end of the year. Will it go higher? Will the PSA go higher? Will it go lower? Or will it just be range trading forever? There's no forever in this market. Everything is dynamic. The PSA is changing. The environment is changing, not by the years, not by months, not by days, but by the hour, the minute, by the second, and by millisecond, even by millisecond. So we've got to have the most financial education that we need, because we cannot be overly pessimistic. If you're overly pessimistic, given all the headwinds abroad and local, you're going to be paralyzed. You cannot do anything. You won't invest. You're just gonna be like freeze. But on the other hand, if you're overly optimistic, then what happens is that you're going to do revenge buying, and you'll end up doing a lot of revenge cut loss. So it's difficult. So we need to be financially educated so we can navigate this market better. So where am I? I'm in between. I'm not too pessimistic. I'm not too optimistic, just sober and very realistic. So I'm going to share with you my view of the market, where it's going, what are the pitfalls to watch out for. So first slide. So let's see. Let's have first some sort of a history, a background. So the message here is that the PSA is on a 6-month cycle, meaning the recovery of the PSA from the low to the high has always been over a 6-month period. And this is true for the last 2 years, 2020, 2021. What happened in 2020? Recession, lockdown, negative 10% GDP. From start of the year 7815, the PSA dropped 40% to 4,600 in April, March. And then we recovered to a high of 7,400. That happened near the end of the year, 2020. What was the corporate earnings then? Negative 40, negative 80, 57% per quarter. It's all negative. So the following year, we were hopeful. The markets were reopening, the economy is going to grow, and we did grow 5.6% for our GDP. Corporate earnings soared 40%. What happened? PSA rose by another 20%. We had a higher low, 6,100 in May. And from that low, which is higher, of course, than the previous year's 4,600, we rose by 20% to 7,400 again towards year end. So we had another top this year, which was 7,500. And from that occurred February 9. And from there on, we plunge. Who could have predicted Mr. Putin is going to invade Mr. Zelensky, who's going to invade Ukraine? Who could have predicted that? That's why early in the year, we were projecting 7,900, 8,100 end of the year for this year. But Mr. Putin changed all that. The war in Ukraine has roiled markets, weaponized the dollar, step up the sanctions, weaponized energy and oil, and we are all in the midst of, now it's in the headlines, is stagflation, recession risk. So where is the market going? From here on, we think, based on the previous movement of the PSA, there is a strong possibility we could be on a 6-month rebound. Next slide, please. So let's look at the other crisis here, the bear markets of 1998, Asian financial crisis, and then 2008 global financial crisis. What happened? We saw a 9-month recovery period after the PSA plunged 61%, very sharp downturn, 1998, 91% upside. And then in 2008, we saw the PSA plunge again, 48% bear market territory, and we PSA recovered 92%. Over a 9-month period. We saw again the PSA plunge because of COVID, and we recovered over a 9-month period 62%. So there is always that recovery period, very resilient, because the economy now is more robust, meaning we're not we're not in lockdown. We're reopening. We're highly inoculated. So the economy is going to roll, as Dr. Abola said, 6 to 7% this year. And corporate earnings, I'll tell you later what is our forecast. Next slide, please. We almost touched bear market territory. So why would you be why would you be investing in equities? Philippines is growing. It's a growing economy. We're not on lockdown. We're reopened. We've inoculated. The best in Asia, GDP of 8.3%. It's a reopening story. It's a growth story. Next slide, please. Corporate earnings still growing 10%, double digit in the first quarter. What about the blue chips? Are they expanding? Capital expenditures, 37%. Projected to be the growth of CapEx this year for the Philippines' best corporation. Next slide, please. What would be the PSA upside drivers? What would be the catalyst? Recently, we all know inflation rose 6.1%, and the market rallied. That's not mainly because of inflation. So many people were surprised. Why 6.1%? And then the market rallied to 6,300 from low of 6,100. And that's really because of the BSP messaging that they're going to fight inflation strongly with a bigger resolve. And that's been the pattern of the market also in the US. Every time the Fed says they're going to fight inflation, bring it down to the target, the market welcomes it and is staging a relief rally. So that is something to be watchful out for. Okay, so for the PSA upside drivers, we should be thankful that we had a peaceful election. You see in Sri Lanka now, it's all political upheaval. In Pakistan, in London, in UK, they don't have a prime minister. But we had a peaceful election, which means we have democracy working, functioning, and ensuring that the continuation of reforms will be there. And so corporates will be able to plan, invest, and have the confidence that the investment horizon is going to be stable. And then inflation, we're suffering from high inflation, 6.1, but hopefully the BSP policy rate hiking is going to temper the demand spillovers of inflation. We've seen the minimum wage rise 30 pesos, and then transport fares also higher. So the BSP is hiking rates in order to temper the spillover on the demand side. On the supply side, it's BBM saying he's going to be on top of the Department of Agriculture to implement supply side measures. And then we have a BSP that remains to be very pro-growth, not ruling out a triple R cut should the economy slow. Next slide, please. Infrastructure will continue. We have a 5 trillion budget, national government budget this year and even next year. It's going to be PPP-led mostly, as Dr. Abola indicated. And then we will continue with our market-friendly reform, Public Service Act, Retail Trade Liberalization Law, and the revision of the Foreign Investment Act to make it friendlier to foreigners. And don't forget mining, riding the upcycle of the commodity prices. And very good, very investment-friendly regulatory environment. This is the color of mining from Lepanto. Ayan, mining, tourism, and agriculture. Don't forget tourism, reopening, vaccinated, and agriculture. We will have a revival in agriculture based on the messaging of the new administration. We're a reopened economy. First quarter growth, highest in Asia. I hope we're able to sustain. Next slide, please. Pillars of growth, as already mentioned by Dr. Abola, BPO continuing to be a productivity boosting tool. This is going to be part of the emerging global, more digital economic growth onwards, globally, locally, and we have a core competitive edge here. OFW remittances continuing to grow 4%, foreign direct investment already at the 12 billion level. 3.4 year-to-date May, 12% growth. Rise of new opportunities because there's going to be Asia-China, US-China rivalry, decoupling, Cold War, and the trade is going to be diverted into friendlier areas, friendlier regions that can deliver on these raw materials, on the intermediate goods. So it's a supply chain reorientation. And it's going to benefit ASEAN. ASEAN is going to be front and center of that trade reorientation. Relative valuation, we are now at 15 times PE. The market has moved lower today, maybe 14.9, 14.5 times PE, on par with the developed markets, a little pricier than the emerging markets, and that's really because we deserve a premium because we're growing. We're growing. We're sound fundamentally. Regional stimulus. China is not tightening just like the Fed. China is actually stimulating because of the zero COVID policy shock. They're embarking on a 550 billion stimulus. Japan is doing the same, trying to stimulate the economy. It's aging. There's not much consumer spending, and so inflation is low at the expense of the yen, of course. And these are all going to be part of the positive backdrops for the PSA. Next slide, please, to stage the recovery. So this is our view of the year-end scenario, 7,100, EPS growth 10%, 17 times PE. Oh, some are not excited about 7,100. So I will be showing you a portfolio construction approach. You may consider it, you may spice it with some other strategies, but this is the recovery that we see, 600 to 603 for the PSA now, going to 7,100. The instrument that you should have to be able, of course, it can cut both ways. The instrument that you should have in your portfolio should be the next slide. It's contained. This is the instrument for first Metro ETF. This is the instrument that's going to provide you with instant diversification into the Philippine blue chips, 30 companies of the PSA. So if the view is for the market to recover to 7,100, you have this instrument, you're able to perform on par with the market. So it's just performance on par. You should have some outperformance, and therefore you should have the following. Next slide, please. So for some outperformance, I already mentioned this. Next slide, please. For some outperformance, you ought to build your portfolio of dividend-paying stocks. We've got to have cash flow stocks, the stocks that's going to give us sure money every time. Coincidentally, these stocks happen to be also the best performing in terms of price gains. Look at Semirara, like 20 pesos. It's has gone up to as high as 36 pesos. Meralco, the top gainer. Nickel also very much in demand globally. DMC, SM Prime. So all of these names should be included in your portfolio of dividend stocks to give you that recurring income and your cash flow. Next slide, please. So you should also screen for VLP. VLP is attractive valuation, low leverage, and strong profitability. Valuation is very important. So dividends, I already mentioned earlier, that's for your yield. But for your value is also important. And most of the stocks that you can see on this left side are already showing PEs that are already at half the lowest PE average for the last 22 years. What more do you want? You want it lower? This is already half of the PE during the crisis years. And it is a strong argument for you not to buy them all, but to start accumulating. Start accumulating. Then we want companies, of course, who have very strong balance sheet, huge liquidity, because you know interest rates are rising and financing is very costly now. So go for companies that can withstand the interest rate hikes. And of course, for those that are very profitable, you'll see that the model portfolio here is showing an average of return on equity of 27% and an average leverage of 37% and valuation of half the average of the lowest in the last 22 years. So these are very tough screening criteria. You won't go wrong. Next slide, please. So aside from that screening criterion, you should also make sure that the stocks are riding the wave of some global mega trends and themes like the global reopening, endemic living, companies that are able to take advantage of tax shield like REITs, because they're all bundled up rental portfolio assets that are free, enjoying income tax holidays. And so the owners are able to get dividends that are tax-free. Of course, for individuals, it's 10%. For OFWs, it's 0. So wouldn't you want to be exposed to these companies that are giving you tax, an upside in terms of the tax exemption, and also very low valuation now? Some of them are below the IPO price. And the flip side is that you get a higher dividend because you're entering at the very low price. Commodities, we have these names, nickel, Semirara. Play on the foreign exchange gain. These are all exporters. Semirara exporting coal and able to take advantage of the power shortage because it's running on electricity, several electricity plants. Nickel is in the midst of the electric vehicle revolution. It's now engaging into renewable energy. It is an exporter and therefore able to gain also on the FX movement. The banks, you should not forget the banks, because the banks would give you the yield capture. Interest rates are rising, credits, loans are riding the upcycle, 10% loan growth for the entire industry so far. The yields are going to be wider, the spreads on loans. Very strong capitalization, Philippine banking industry, 16%. Metrobank, BDO, BPI, the biggest franchises. We prefer the biggest franchises in the industry because they are the most stable, adequately provided, and if in case the NPLs rise, they are there, very stable, strongly capitalized. We also like energy suppliers because the country is in dire need of more capacity for power. Aboitiz Power, AEB, in the forefront of renewable energy, transitioning from coal and putting up so much battery storage capacity as part of the transition from coal, dirty fuel to clean energy. AEV, Semirara, Meralco, and SGP. Next slide, please. Your dividend play, as I have said, DMC, AREIT, and the reopening stories. These are the companies that are going to make bawi in terms of the P&L because they have been hit so hard by the lockdown. Jollibee, the gaming business, Bloom, GT Cap, Metro, revenge driving. Metro Pacific, expanding into property, expanding into the less regulated industry, healthcare, and recently agriculture, has the highest capex for this year, about 140 billion. Logistics and trade, global reopening, global supply chain reorientation, ICTSI. Next slide, please. So risk to market view, very few. Domestic inflation may be higher than expected. Interest rates may be higher than expected. Escalation of the Russia-Ukraine war and other geopolitical events, and climate-related disasters. So the market will always be there. The question is, will you be there? I will be there. And my next song is, I'll be there. Thank you and good luck to your investments.
Thank you very much, Ms. Ulang, always the entertainer, but with a lot of substance. So there you have it, the much awaited stock recommendations and their drivers. Again, let me kind of like share with you my takeaways. Ride the market and at the same time have some alpha picks. And if I may add, how best to do that than to invest in the country's only ETF, the First Metro Philippine Exchange Traded Fund, which can be accessed through First Metro Securities Brokerage online platform for the secondary trading, or for primary, you can reach out to First Metro Asset Management Inc. That's fami.com.ph. And again, for your alpha picks, again, you have FMSEC online platform. Okay, if the Philippine economy is growing and the outlook for ASEAN region is bullish, including the Philippines, how come the PISA remains low or non-moving with net foreign selling?
Yeah. You know, there's only one reason. It's because the dollar is strong. And all the money is going to the US. The Fed is hiking. So bond-wise, the attractive asset is US bonds, haven. It's all risk off, and therefore the foreign funds are all there in the haven. And the new haven is the dollar. It's not gold. It's not equities. But the silver lining is the fact that we continue to grow. That's the beauty of our economy. Why are we still growing? We are very strong because we have these growth pillars. We have the reforms. Hopefully, we're able to attract foreign direct investment. We have BPO. And the most important thing is really your foreign reserves. Without the foreign reserves, look at Sri Lanka, what happened. The economy will be on a standstill. But it's not, we're far from it. We're so remote from that scenario. We are one of the few countries that have embarked on a very sound history of reforms, fiscal consolidation in the past. We are PPP, gonna be PPP led. So we have this monetary and fiscal space to propel our growth.
Okay.
They are all abroad because of the strong dollar. That's the reason. The Fed hiking.
Okay. So in relation to that, or together with that question, what do you think, how important then is hot money or foreign investors to the stock market? How can we minimize the negative effects on the stock market with the outflow of money?
Yeah, that's why we're conducting this financial education forum, because there is now a massive mispricing. The market is pricing us as if we are on lockdown, as if we are on recession, but the economy has reopened already, and there is very little appreciation for the very smooth transition, political transition, continuity of policy reform. The market is filled with jitters, very nervous and distracted, because I cannot blame the market, because we have transitioned from a period of moderation. We've been used to high growth, 6% GDP, and then low interest rates. Last year we were on lockdown. The BSP continued to support the economy, and we did improve in terms of the GDP. But now it's a different story. The supply chain disruption that was caused by COVID is being aggravated by the Ukraine war. Weaponization of the food, weaponization of oil. And so we have this inflation, and we have this war, and we have aging, and we have step-up sanctions, and we may be having an oil embargo very soon. And so the market is confused. How can the market possibly price in all of these moving parts? And so I don't blame the market. It's but natural that the market could be range trading, it's risk off, and the way to mitigate that is really to make people understand that this is a wonderful moment. Some stocks are screaming buy, and this is not the time to run away from the market, because this is the time that can make you. I remember somebody asked me, is a bear market, what does a bear market do? Can it make you rich? A bear market can make you rich. A bull market can make you earn. You can earn from a bull market, it's rising. But a bear market, if you invest in a bear market, it can make you rich, because over a 6-month, 2-year, 3-year period, you wake up and suddenly the stocks have flown higher. So this is a wonderful moment, and you should love crashes, mini crashes, because these are very good and golden opportunity to accumulate. I'm not saying buy it all, you accumulate the good stocks. Be very selective, that's the message. High selectivity is going to pay.
That is so true. Okay, and there's another question here. That's right, in all uncertainties, in fact, to be able to get rich, you want uncertainty so that you can actually take advantage of it. There's another question here. Are there any indicators we should closely monitor? There are a lot of indicators, but if there's any single indicator that we should monitor, what would that be? That would signal an inflection point. See here. Okay, so they're buying our story that, it's time to accumulate, but is there any indicator that will reflect an inflection point?
The number one killer is inflation. It's the one wreaking havoc in the US, in Europe, here in the Philippines, and it has forced central banks of the world to fight inflation. So this is something that is worth watching out for. When inflation is going to peak, and how strong will the policy action be? I think these are the two indicators that are going to be closely watched. And once the inflation peaks, then the market will always be forward looking, and you can see that the sentiment is going to improve. I don't know what Mr. Putin is going to do in Ukraine, but it is really worth watching also how the supply intervention of the new administration is going to address the inflation or temper the inflation, because most of the inflation now are imported. They are all driven, FX driven, but we have some room for supply chain intervention, agriculture revival, some maybe fiscal, maybe subsidy for fertilizer, strong
Right.
agricultural support, and a keen eye on removing the bottlenecks in the supply chain. So that can help.
Thank you very much, Christy. And one of the comments, let me just share it with you very quickly, is mahilig naman tayo sa discount, di ba? So why not invest now into the market? And as you said, the market's always going to be there. Now, to our panel and to our audience, are we going to be there?